Hello and welcome back to my 10 favorite people. Hope you're doing well. We were expecting a volatile week this week, and so far Bitcoin has not disappointed. After another day of strong ETF inflows yesterday, coming in at almost 500 million, and grayscale outflows remaining low at 95 million, it's no surprise that we saw continuation yesterday after last week's strong weekly close, but after trading above 50,000 briefly, Bitcoin is struggling to maintain this breakout after the hotter than expected CPI print that we got this morning. The market was expecting 0.2% month over month, but more importantly, we were expecting 2.9% year over year, which was going to be the first print below 3% in over 2 years, but instead we had a beat on both with 0.3% month over month and 3.1% year over year, reminding the market that inflation is remaining stubborn above 3% and well above the Fed's target, and forcing the market to push back rate cut expectations once again. And for the very first time, we have June as the most likely meeting for the first Fed rate cut. And of course, risk assets did not like this, so we're seeing the S&P 500 put in a bit of a correction, which is bringing down Bitcoin alongside it as well. Because when you have hotter than expected inflation and a labor market that's remaining resilient with a low unemployment rate, you then have a Fed with no reason to cut rates sooner, and you have to push back these rate cut expectations. And because markets are forward looking, rate cuts was something they were looking forward to sooner. And as they get pushed back, you would expect some downward pressure on risk assets like the S&P 500 in the short term. And of course, this will change as we get closer to these meetings, as we get more inflation and labor data, but these are the current expectations as of right now that the market is pricing in. Now, we've been talking about an S&P 500 correction anyway for a while now. Out of the last 15 weeks, 14 have been green, and we also know that thanks to election year seasonality, late February and March tend to be when the S&P 500 has its corrections in election years on average. So this is a healthy correction for the S&P 500 in my opinion, especially because we've put in new all-time highs recently. And maybe this correction for the S&P 500 is what ends up forcing Bitcoin to have its correction as well, because they have followed each other on the way up. And maybe now that we finally see this correction for the S&P 500, we see it for Bitcoin as well. And I still can't believe we're following the same price action from the futures ETF launch. We talked in my last video about how Bitcoin loves to take liquidity to the downside and then rally and take out previous highs and take out liquidity to the upside. And of course, I'm not expecting a new bear market, but if you look at current price action, we had a local high at 44,000. We went up and rallied above that level. Everybody got euphoric and started FOMOing in, celebrating, saying the ETF just changed everything. And of course, Grayscale started having outflows. We came down and took out the lows below 40,000, taking out those previous support levels. Everybody started panicking, saying Grayscale was going to unload billions and it's all over. And of course, after 3 weeks of green, we then come back up and take out previous highs once again and capture all of that FOMO and liquidity, just like we did at the lows. And just like we did with the futures ETF launch. So the real question now is, can Bitcoin maintain this breakout and stay above 48,500 by the time we get the weekly close? Because of course, this candle can change quite a bit between now and Sunday. So we're going to wait for Sunday before jumping to any conclusions. But it doesn't look great as of right now, especially coincided with the fact that the S&P 500 looks ready for a correction and we have inflation running hotter than expected. And the number one thing I'm going to be watching aside from that price level is, will the ETF inflows remain strong while the S&P 500 has its correction and while the market prices in these rate cuts getting pushed back? Because we've seen these ETF inflows remain strong as price has gone up, which of course makes sense. But now that there's that tiny bit of uncertainty and we start being concerned that inflation is remaining higher and rates are going to remain higher for longer, can those ETF inflows remain strong? If they do, I would expect a lot of FOMO and we probably go higher in the short term. But if we see these inflows slow down after so many people have projected them going forward and celebrated this new paradigm, I think it could be a game changer if we see these inflows start to slow down as price goes down in the short term. And of course, a lot of this is short to medium term noise. In terms of my portfolio, I feel incredibly comfortable with price going in both directions. Even though I'm not 100% allocated, I still make money if price is going up. Could I have made more? Of course. But I also like managing my risk and having that cash, because when prices go down, my cash goes up in value in terms of how much crypto it can buy. And I don't feel any fear or panic on the way down because I'm not 100% allocated praying for higher prices. So a lot of this short to medium term noise and FOMO and fear is very easy to navigate if you have a conservative portfolio and have a healthy cash position, which is why I structure my portfolio this way. Of course, I'm going to get outperformed by a ton of people who are way more risk on right now if price goes up, but I'm also going to outperform a lot of those risk on people if price ends up going down. And one important thing to remember, if this time really is different and we do get our first ever monthly close above the 618 Fibonacci retracement before the halving, and this is going to be like no other cycle and we're going to go significantly higher, if we look at the last bull market, from the moment Bitcoin broke above its 618 Fibonacci retracement until its cycle high was almost exactly a year. So this thought process of I missed my chance, I'm never going to get to buy at lower prices, again, I messed up this bull market, I'm going to have to wait for the next cycle to have that same chance, that mindset really makes no sense in my opinion, because if this time is different, and I don't believe it is, but just in case it is, you're going to have months and months and months to make trades and make investments and buy new projects. So this fear of missing out because you didn't buy a local low is really hard to wrap my head around, because there's going to be so much opportunity if we do in fact enter some kind of mania bull market. So try to come up with a plan for the longer term instead of being really worried at local highs and local lows. And of course, we're going to have to wait until February's close to see if this time is in fact different. And of course, we'll change the portfolio accordingly. And I keep getting questions of what altcoins I'm going to buy. I haven't decided yet. I'm going to see what the best performing altcoins are once Bitcoin breaks out, but I do not want to be buying altcoin exposure here in case this does end up being a fake breakout and we get a close back below that 48,500 level thanks to a correction from the S&P 500 and potentially a slowdown in those ETF inflows. But things definitely are starting to get very interesting, because if these rate cut expectations keep getting pushed back, the market is going to have to accept these rates being higher for longer, and maybe rate cuts aren't going to happen as soon as the market had initially thought. And I do not think that will be good for risk assets in the short term as those rate cuts keep getting pushed back more and more. So labor data is something I'm going to be monitoring very closely every week. And we don't get inflation data anywhere near as often. So we're going to have to wait a month until the next CPI print. I think we do have PPI coming in at the end of this week, which is our leading indicator for CPI, the producer price index. But we don't get inflation data anywhere near as often. So I think these expectations aren't going to see too much fluctuation until we get some more labor data to see if maybe the labor market can force the Fed to cut rates sooner. Because as of right now, it looks like inflation is not going to help them out in terms of getting those rate cuts done at the March or May meeting. So we'll see what happens. Definitely not going to jump to any conclusions until we see the weekly close. We're going to find out if Bitcoin is going to maintain this breakout or deviate back below it. And we are seeing some interesting strength from Ethereum. Normally, when Bitcoin gets a rejection like the one we saw above 50,000, you'd expect a larger correction from Ethereum. But as of right now, it is down less than Bitcoin is. Actually, funny enough, Solana as well is down less than Bitcoin is this morning. So we're going to see how that ends up playing out. And I would not jump to any conclusions before we see this weekly close, because we could very well just continue this rally higher if the ETF inflows remain strong and remain around this $400 to $500 million level. So we'll see what happens. Let me know what you expect. Do you think these ETF inflows will remain elevated even after we got a hot CPI print and even after we see the S&P 500 begin to cool off? I think they will slow down and the market will not like that whatsoever. But of course, we'll see what happens. And of course, let me know if you expect us to hold this breakout or if this ends up being a trap, just like we saw multiple times around the top with the Coinbase IPO, and just like we saw with the top after the futures ETF launch. Bitcoin loves taking out previous highs and wrecking shorts before actually rolling over and going down. But anyway, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.